Hey everyone, thanks for joining in. Pretty hectic day today. Just a quick audio check and then we can get started. Okay, so there's already a request for gold. Is it gonna push even higher and stuff like that? We will take a look at that. Okay, let me know if audio is alright, everything's okay. This is very distracting, but I kind of thought, hey, you know what? I've been having issues with audio. Maybe if I picked up a mic boom, I'll figure it out. Okay, audio's great. It's okay. I'll answer in English, but any questions in any language that I can pick up, that's fine. All right, just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account a particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry high level of risk and are not suitable for everyone. You can lose more than your initial deposit. So you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay. Right. Right. So there's a little bit of a nice trade on the dollar yen. You guys probably noticed that I've been a little bit quiet on the Telegram today. A little bit hectic for me today. So I just finished up. But in any case, there's one trade that we need to take a look at, and that's actually the dollar yen. So for those wondering what that spike is, I kind of gave out that warning pretty much throughout the whole week. And look, let me tweak this a little bit. Is audio coming through okay, or is it a little bit too low? Okay. Okay. Let me know if the audio is a little bit low. I'll boost it up. But for now, I'll leave it as it is. So the dollar yen, this one here, it's a little bit of a disappointment. Woke up pretty early, positioned everything ready, hoping for the Bank of Japan to kind of move away from their ultra easy monetary policy. Unfortunately, we just don't see that, and this is going to be a problem going forward. And we can see the initial reaction in the market; it spiked up. That's basically on the thought Bank of Japan basically maintained their yield control curve. Nothing much has changed. They did change a little bit in terms of how the mechanics of the bond buying happens, but I'm not going to go into details on that one here. It's just going to confuse everyone. Point is, initial reaction was a weaker yen, but if you take a look at the turnaround throughout the whole day, this is on the daily, right? Where it got rejected today, that was basically our key support turn key resistance. So this one has been tested. So we have seen the market break below it. I came back to test it today. One thing to note here is that it got rejected at the Tenkan Sen, so indicating the short-term trend remains to the downside for the dollar Japanese yen. So this one here is a little bit unique, right? Some of you picked this, some of you probably shorted it at 131.50, some of you probably went long and get out at 131.50. Either case, what we are looking for today on the dollar Japanese yen is actually a potential break below any close below 129. That would actually trigger a little bit more on the short-term selling on the dollar Japanese yen, right? So the 129 level is going to be a breakout key level. If you see a break below 129, then there's actually a possibility further drop to the downside. It's actually possible for the dollar Japanese yen. So keep in mind on this one here. This is on the back of, people are actually not convinced, and this is the reason why we were anticipating for the Bank of Japan to move away from their, ultra easy monetary policy. If they did it today, it's kind of problem solved. We got one issue is taken out, but the thing with Bank of Japan right now, it's not, if they're going to be moving away, it's actually when they're actually going to be moving away from this. So they can play the game every month. So we got January done. So we'll have a window of until February before their next meeting. But ultimately, I think they're not going to be doing anything until April. When the governor changes, then they're probably going to be doing something. So in with the dollar Japanese yen right now, the sentiment is a little bit weird, right? So we saw what happened this morning. Bank of Japan maintains the cap, but the yield itself, the yield actually went back up again. So it's kind of useless. We are basically back at square one, back before we actually saw that rally this morning. Anyway, so with the dollar Japanese yen, the key level here is 129. If we actually lose this 129 on the hourly time frame, I much prefer to actually go for a short. You might be thinking, well, this is above the Ichimoku cloud. Why would you want to go short and stuff like that? For one few good reason. Let's bring you onto the daily in terms of the FIB count. This is where it got rejected. It fails technically at 61.8, so we don't actually consider this at 78.6, but you can value this as a rejection at 61.8 or 78.6%. I would take it at 61.8% because we never had an hourly close. We don't have a daily close above 38.2 even, right? So we just see this spiking up. So the in terms of how far it's pulled back up, so I think we're quite clear on this one in terms of how far down it could go if there's a short position. This is what we are eyeing for. A break below 129 is likely going to put this below the 78.6%. If that happened, then we are actually going to be looking for an extension to the downside. This one here, the 127.2%, is actually located at 127. Sorry, 127.2 at 127. Right. But this would open up a potential drop. Closer to 127 level. So I would probably put it at 127.25. In terms of stop loss, you can have it just slightly above 129.50. In terms of risk reward ratio, this is actually going to be great because we are taking advantage of that spike. It's more of a confirmation that the sentiment remains, to the downside for the dollar Japanese yen. This is slightly different if we take a look at the sterling yen later on. I think the euro yen and the dollar yen are pretty similar, but the sterling yen is slightly different, right? So this is what's going on with the dollar yen on the daily time frame. I think we're still looking for a potential push lower towards that 126 level. Overall momentum remains to the downside for the daily time frame, so we just want to take advantage of that. There is one criteria on this one here. This one needs a confirmed close below 129. The other thing is if it moves back up above 129.50, if there's an hourly close above 129.50, then this trade needs to be cancelled. All right, so this is actually only going to be valid for a for a short trade if price doesn't go back up above 129.50. If price goes above 129.50, then we don't have a lot of choice. We actually need to switch to a long position. Then in terms of target level, you could go for that 131.50 or closer towards 132. All right, risk reward ratio, it's about the same, give or take. In terms of risk, we are looking at about 50 to about 70 pips in terms of risk. Okay. Overall, if I take a look at the daily time frame, the daily it's probably a little bit unique because this could also form an inverted hammer, right? So we don't know as it is right now, but in terms of momentum, I still think there's a little bit more room to go to the downside. So I much prefer to go for a short despite the hourly time frame being above the Ichimoku cloud. I just considering the sentiment in the market right now, I think people are just going to be afraid or trying to figure out what Bank of Japan is likely going to be doing. Okay. All right, so that's the dollar yen, which brings us, let me just cover the yen crosses first because there's going to be a lot of questions on the sterling yen as well. What do we look at the sterling yen and the Aussie yen and stuff like that? So with the sterling yen, I'll keep this fib. I just want to show you this. I'll draw this again. I'll keep this one. So with this one here, it did spiked up. It actually created a higher high on the daily time frame, but it never actually closed above that 78.6% mark. So the overall tone on this one here, take a look at it. It's still below the Ichimoku cloud. So I would say if there's a rejection at 78.6%, then the previous fib is still going to be in play. And you could draw a new one if you want to. I think we can draw a new one. But we're looking at around 160. As long as price is still trading below 160, then the possibility for it to progress to the downside is still there. But if we take a look at the hourly time frame, this one here is a little bit different because we just had the inflation number from the UK. It dropped down, so everything is good. All right, it gave the pound a little bit of a boost, boosted the sterling yen as well. So this one, likewise, in terms of potentially going for a short on this one here, this is going to be a little bit tough for everyone to take because this is above the Ichimoku cloud, but the Ichimoku cloud is really, really thin. In terms of progression, price needs to close below the Kijun Sen, which is around 159.30. So I would say if there's an hourly close below 159.25, then there's actually a potential to go short on the sterling yen. Target level, I'll go for the previous support level, which is around 157.50, or you can go for 157 if you want to. The risk reward ratio is about 1-to-1 initially, but this can be adjusted once we have that confirmed close on the hourly time frame. All right. Yeah, the dollar yen rejected the Tenkan Sen. There's a rejection on the Tenkan Sen on the day. That's why if we read that rejection and we kind of look at it from the Ichimoku Kinko Hill perspective, then the short-term trend remains to the downside for dollar yen. Sterling yen here, I'm not too sure on the sterling yen just because we have a strong pound going on right now. Even the euro kind of loses out on the pound just now. But with the sterling yen, there is that possibility if it closes below 159.50, then you could see a little bit of a drop to the downside a little bit. You can come back to 157.50 and it's still going to be above the Ichimoku cloud, right? But the risk reward ratio just doesn't click initially. So I would really wait for a little bit of a confirmation on the sterling yen. If you want to trade yen crosses, I think you could move on to other yen crosses like the euro yen. Right, this one here it's much more in line with what we're looking at the dollar yen. There's a little bit more of a swing going on here. If we break 139.50, then that's where I want to go short. The Ichimoku cloud it's pretty much non-existent, right? We can measure it for the next 17, 20 hours. The next 20 hours, it's going to be non-existent. It's pretty much non-existent, right? The pullback level is going to be about 139. I think there's a possibility for a potential short. If we take a look at the euro yen on the daily, it forms the same pattern as the dollar Japanese yen. So I would go to say that the correlation between dollar yen and the euro yen, they're really positively correlated. The sterling yen is a little bit off if we take a look at the correlations, right? But if you can go short the dollar yen, then you can actually go short the euro yen. I think both of them are pretty much in about the same situation. So I'm not looking for a long. I much prefer to go in for a short because this is very, very deceiving. The transition this morning, this was on the back of a news that was kind of a disappointment to the market because market was expecting the Bank of Japan to be a little bit more hawkish. They remained dovish, and it causes a little bit of a whipsaw. I think the movement today for the Japanese yen, and I spent the whole day looking at it, trying to figure it out. Look through all the fundamentals, look through all the new regulations, and the assumption that I get is the Bank of Japan is still going to shift. It's just not if, it's when they're going to be doing that. So with this thought in mind, then it's still going to weigh a lot on the sentiment in the market. I think the sentiment in the market is that people are still going to be concerned with Bank of Japan. If the yield continues to bump the 50 basis points cap, Bank of Japan might not do it now, but if they keep buying bonds every single day, they might give up next week and say, you know what, we give up, and that's the current thought in the market. So I'm not a contrarian trader by any means, right? But with just this one here, there's just a lot more momentum for this one to go to the downside. So I think we are kind of in the middle of the range right now. We are back when before the whole rally happened. So I think we are around that threshold right now. So an hourly close below 139.50. I much prefer to go short for the Euro Japanese yen. Sterling yen, not so much. The Euro yen, yes. I'm just not too keen on the sterling strength right now. In terms of target level, you can go for 138. Risk reward ratio is going to be 1 to 2. So dollar yen and euro yen, I think these two are going to be something you need to watch out for if you are a yen trader. The Aussie Japanese yen is also one thing. With the Aussie Japanese yen, I don't actually need to wait long for the Aussie Japanese yen right now. If this can actually be a swing trade if you want to, just as long as you're willing to have your stop loss above 92. If you're willing to have your stop loss above 92, then you can actually go in for a short on the Aussie Japanese yen. Right, and basically this one, I think you can go in right now in terms of target level for this one. We would go with a projection from the 4-hourly time frame, which would be this. It'll be around 88, right? So this one, just one thing to keep in mind with the Aussie Japanese yen. This one here has double the risk of the euro yen and the dollar yen. So this one here is a little bit unique. Aussie yen typically doesn't give that much of a risk here, right? But this is just an initial risk. If you want to wait for a confirmed close, then you can wait for a confirmed close below 90.50 if you want to, and then you can apply the same strategy with the euro yen and the dollar yen as well. So hourly close below 90.50. You can then go in short if there's an hourly close above it. You can have your stop loss maybe around 91.25 if you want to, but if you really want it to be a swing trade, then you need to have it at 92. If you want to do this for an intraday trade, then have it around 91.25 at the very least, right? So yeah, I think Aussie yen is probably more it's better position because we do know that the whole 92, 91, it's a tougher level to break compared to anything on the euro yen or the sterling yen. Was there a high impact news on the dollar? Yes, there was one during the Asian session this morning. Japanese time, it would be at around 11-12, I believe. Bank of Japan basically maintains their monetary policy. This was something that we discussed throughout the whole week. There was a concern of Bank of Japan removing the yield control curve. They didn't remove that, so yeah. Okay, so those are the yen crosses. Let's take a look at gold. I think there's a lot of requests on gold. All right, so here's gold. Can gold continue to go up daily wise? I think we just bounced off 1,900. Let's take a look at it on the hourly time frame just to make sure. One thing I would look for is any divergences. So far so good. I don't see any divergences. I think we might actually see a little bit of a bullish divergence on gold. So yeah, can it go higher? We bounced off 78.6. We bounced off 1,900. The hourly fib would actually be this one. This one here is very close to the current target, which is going to be about 1920. 1920 for the 161.8%. And then, yeah, can it go higher? I think if we take a look at it from the 4-hourly perspective, then potentially yes. But again, it needs to overcome that 1920 level. But I think the overall tone on this one here, even on the 4-hourly time frame, is that we might actually push higher on gold, potentially towards 1935 level. So yeah, I think there's a little bit more room to go on gold. We're kind of in the middle right now. But transitioning above the Ichimoku club, we might actually see price, move like that a little bit. But I think the overall tone is still there for stronger gold. I think it's still there because we had a bounce from the daily time frame. What I need was on the outlook this week was basically just any bounces between 1880 or 1900, and we saw that bounce. The momentum remains, stochastics remains above 80 levels, so this could indicate a quick run to the upside if the momentum picks up again on the shorter time frame. Okay, let's take a look at oil. So pretty clear on gold, yeah. For gold, my view, it's pretty clear. In terms of technical requirement for whether or not we can still go long for gold, as long as it bounces off 1,900, I think it's okay. Overall tone on the hourly time frame, it's fine. As long as price doesn't go back below 1910, it's okay. So if you're trading gold intraday wise, just make sure it doesn't go below 1910. Because if it goes below 1910, we might be in for a deeper correction. As long as it stays above 1910, then it should be okay. So with that said, can you go for a long position or can you hold your long position? If you want to hold your long position, make sure your stop losses are close to 1910, maybe about 1908, right? In terms of potential targets, you can go for 1925, 1930, or you can push it closer to about 1935. That's pretty much it on gold. It's pretty straightforward for now. The Japanese yen was basically the one that's kind of a little bit of a headache for a lot of traders. All right, dollar oil daily about to transition. I'm waiting for it, Wolvin. I'm waiting for it. I'm all in for a break above the Ishimoku cloud, but we're not seeing that as of yet, right? So the answer is asking, can you hedge the short position? Can you go short? I wouldn't want to go short oil, not on the hourly time frame. I'm not looking at any potential slight divergence, but nothing really major. Why? What do you want to hedge your position? I thought your position was like around 71 or something. You should be thinking about scaling out of your positions instead of hedging it. Are there any news that would affect gold during the New York session? I think in about 1 hour's time, exactly 1 hour's time, you are going to have the US PPI numbers and the US retail sales number. You guys are probably wondering why I don't mention anything about the euro inflation number. It's not new, right? This is a final inflation rate, but we already have the preliminary rate, which is kind of a guidance to the current inflation rate. So it is final. It is as the flash inflation rate numbers are, so it's not really anything new. Talking about the UK inflation here again, this is falling into the same issue as the eurozone. If we take a look at the inflation rate year on year, it drops down slightly from 10.7 to 10.5, but the core inflation actually picks up. So it's not picking up. Sorry, core inflation actually remains the same. It didn't drop down to 6.2% as the consensus. It actually remains the same at 6.3. So this highlights that the inflation is really driven by energy costs. Energy prices starts to come off a little bit, but food prices are now picking up. So that's that. Yeah, I probably wouldn't hedge short for oil. I mean, where do you want to hedge it to? If you want to go for a short trade somewhere else, I think it's okay. But I think for Solianto, I think your position was around 71, 72. I think you should be scaling out a little bit. If you want to hold it, it's fine. But in terms of whether you should hedge it, I don't think you should. I don't think you should hedge it. Because it's just gonna confuse you a lot. Okay. A long position at gold 1903, stop loss 1892, target 1928. Yeah, for the time frame, valid flag pattern. What is my view on gold? I think we did take a look at it. Is it a valid flag? As long as it's below 20, should be valid. Yeah, it's perfectly fine. I don't have an issue with gold. Unlike last year where I said, gold I'm not too keen on gold. For this one here, the current run on gold, I think it's pretty okay. Yeah, I'm pretty okay with gold in terms of potential target. If you're targeting 1928, very close to our 1935, I think should be okay. Okay. All right. US oil. This one here, intraday wise, this one here is going to be a little bit tough because if we take a look at the hourly time frame, we do see a little bit of divergence. The 4 hourly time frame momentum just went back up above 80, so not too keen on going short on the dollar. Sorry, the oil here. We might actually see intraday pull back towards 81. If 81 holds for today, then it's actually a potential um, place to scale back in if you want to. Me, I'm just gonna wait for my 82 on the daily time frame. Right. When will the Euro USD, which I need to bring the attention back to Pound USD a little bit here, because Pound USD just cleared off 1.23. So Pound USD breaks. It's currently above, trading above 1.23. I think we might actually see a close above 1.23. This is currently projected towards 1.26. If you're thinking of holding on to your swing trades, I got out on Monday. I cleared off my position on Monday for the swing trade. If you guys are thinking of jumping back in on Pound USD, as long as it closes above 1.23 today, then yes, you can. But intraday wise, this one here looks a little bit exhausted. I got out at 1.23, but you guys probably got out at 1.23 as well. This one here is just an extended 50 pips, right? But this is a trade on Monday, right? If you guys want to get out, I think you guys can get out right now. This one here has touched 161.8%. Don't go in for a short on the Pound USD. Okay, it's just too far away from the Ichimoku cloud. Therefore, we might actually see a little bit of a pullback potentially. Maybe not exceeding, if price doesn't exceed 1.24. So there's a little bit of a criteria going on here. I need price to maintain a position between 1.24 and 1.23. Ideally, it corrects itself back to 1.23, and that's where we might actually be looking to scale back in onto the Pound USD for a swing trade. This one here needs to go back down a little bit, right? Okay, but Pound USD, I'll probably look for a potential pullback towards 1.23. If there's a bounce off 1.23, then that's my cue to go in for a long. On the Pound USD, then I can have my stop loss here, and then we can go higher towards 1.2450, and then you can start adjusting it eventually towards 1.26, right? So even just towards 1.2450 is going to give you a 1 to 2 risk reward ratio. I just wouldn't want to go in right now. If you want to go in on the break of 1.24, then you need to target 1.26. Your stop loss is still going to be at 1.2250. So you got a few choices. Either you go in on the break above 1.24, your stop loss is going to be about 150 pips, your potential gain about 193, or you be patient a little bit and you save a lot, right? You can minimize your stop loss to just about 50 pips. And then your potential gain is going to be 1 to 6 risk reward ratio. I think this is like super worth it if you're patient on the Pound USD. Right. Euro USD, it's so choppy right now. For this one to break, it needs to break above 1.0850. So comparing the I haven't taken a look at the Euro Pound, but I would assume the Euro Pound would be negative right now. Yeah. So the Pound USD is definitely stronger than the Euro. So the Euro USD is being capped by 1.0850. Whether or not it breaks, I think if we take a look at the trade on Monday, the Pound USD was profitable. The Euro USD got hit by hits the stop loss, and then it gets choppy again. This one here, it's sideways type 2 because the range starts to widen again. This one here, I would stay clear of the current market condition. I would stay clear of the current market on the Euro USD. If you want to trade, it's a lot safer if there's actually a daily close above that 1.0850. Until that happens, this is just gonna be choppy. This is gonna whipsaw back and forth, right? This is currently expanding right now. I'm not sure if we are gonna get capped at 78.6%, or if market is actually gonna go all the way back down and then you know trade in a wider range. I just don't know, and it's really tough to predict that on the Euro USD. So I think there's a lot of choices out there. You can go for the pound USD if you want to, yen crosses, but the Euro USD is something that requires a daily close above 1.0850 for it to continue the trend to the upside, right? If we take a look at the 4-hourly time frame, we might be able to see that breakout happen if price does close above 1.0850. So whether you trade on the hourly time frame, daily time frame, or the 4-hourly time frame, you still need that 1.0850. Ideally, if you see that on the 4-hourly time frame, it's okay, because it might give you a much better strength in terms of whether or not it can actually be sustainable above 1.0850. What about holding pound? By all means, if you want to hold pound, I just got out on Monday for my pound because I was trying to stay clear of the Bank of Japan thing. So I'm a little bit disappointed with the news because I pretty much sidelined myself because of the potential risks, and turns out nothing happened. Right. So yeah, pound USD. If you want to hold long for pound USD, it's still gonna be okay. Pound USD, right? GBP, right? So yeah, pound USD, I'm okay with that one. So every pound cat, I think this one here is very close to target right now, 61.8%. You asked me this, Chucks. I know you on the pound cat. So I think in terms of holding out on the pound Canadian, you got a few options. Either you scale out and you move your stop loss to break even if you want to, or you can close everything if you want to, or you can potentially adjust your stop loss to maybe about 1.64, and then you can basically lock it in. If you want to let it run, let it run. Okay, so pound cat, this is your trade. Because you're the only one that asked about pound Canadian. So don't get greedy. It's there. It's a 1-to-2 risk reward ratio. You should be pretty happy. You had a 300 pip run. If you want to hold on, at least scale out of your position, right? If you have, I don't know how many lots you have, but maybe cut it by half and then let the other half run if you want to. But at least secure something and then move your stop loss to break even. Okay. So that's the pound cat. Next up, it's pound AUD. I don't see anything much on pound AUD, at least not on the daily time frame. Let's see if there's anything on the hourly time frame. Yeah, I'm not seeing anything on the pound AUD. Would probably stay clear of the pound AUD. On the hourly time frame, this one here just went inside the Ichimoku cloud. On the daily time frame, we just transitioned below, so I would stay clear of the pound AUD, because if there's any pullback to the upside, it might not be for long. It might be still capped at 1.8, which is huge if we take a look at it on the hourly time frame. But we basically need that transition above the Ichimoku cloud for you to actually target those levels, right? I would stay clear of the pound AUD at this point in time. All right, on Monday I went short dollar Swiss. All right. Okay, at 92.55. Should be very happy right now. 92.55. Your stop loss is at 93. Okay. So take profit is based on 161.8. 8% of this, yeah. I would scale out at 127.2. You're running a good trade this one. Even if you get out 127.2%, this is like a 1-to-4 risk reward ratio. So I would say right now, I would consider this very close to 127.2, right? So what's the distance? How many pips do we have towards 127.2? About 33 pips towards 127.2. If I were to trade this, I would scale out right now. I would move my stop loss to break even, because by moving my stop loss to break even, it's still going to be higher than the swing today. Okay. I would close out, and I would just move my stop loss to break even. If you want to let it run if you want to. You can actually even move your stop loss to lock in a little bit of a profit. You can move your stop loss to about 92.40 and still going to be a pretty chunky bite on the market. No, this is the hourly time frame. Pretty sure this is the hourly time frame. It just looks a little bit small. So this is a 1-to-4, 1-to-5 risk reward ratio. I think you should be happy with what you have right now. Scale out a little bit. Yeah, at the very least, you already have yourself a 100 pip. You can move your stop loss to break even. You can even lock it into about 92.40. But I would say, I would scale out on this one. All right, next up, it's Euro Swiss. On what time frame? See, I don't even have Euro Swiss here. The last time I was looking at Euro Swiss was basically in 2016 when the SNB removed that level. Euro Swiss, where's my Euro Swiss? There we go. All right, Euro Swiss. What time frame for Euro Swiss? 1 hour. Okay. Let me have a look at the Euro Swiss on the other time frame. Give me 1 second. Okay. Daily 92. This is 98.50. Yeah. So the other time frame was around 98.50 on the daily time frame. It's pulling back down towards 50. Hate looking at Euro Swiss, but yeah, I'll have a look at it. Just give me a second here, because this one daily 98.50-ish, as long as it's above 98, then it's fine. Hourly time frame, I think we're not quite done on the hourly time frame. If you want this, then you either need for price to move back above this, right, which is a transition above the Ishimoku cloud. If you're thinking of going long on this one here, if you take a look at the daily, you're assuming there's a bounce off 98.50, then we need price to transition above the Ishimoku cloud. At the very least, it needs to go flat that way. But then, if you do that, you kind of miss out a lot. So you have a couple of options, right? You can look at 98.50 as a potential support on this one. I wouldn't place your stop loss at 98.50 though, because if you're thinking of going long on this one, if we have an engulfing or a piercing, then that's fine. Just make sure your stop loss is going to be below 98.50 in terms of your target level. See, that's where it gets a little bit funny because your risk reward ratio is not going to be 1-to-1. So it's not the time to go in for a long. I don't think so. We just don't have the momentum for it. It's also not the time for it to go short because we are so close to the potential support at 98.50. Because if you go short, then your stop loss is going to be that. Your potential target is going to be that. Your risk reward ratio is not going to be even 1-to-1. So no matter what I look, no matter how I look, the Euro Swiss on the hourly time frame or on the daily time frame, I don't think this is something worth doing. But I mean, hey, I don't trade the Euro Swiss much unless it's more of a portfolio thing. But if you're particular, if this is your favorite, then between the euro and the Swiss right now, I think the euro is getting pressured on the pound side and on the yen side. I just don't think that from the risk reward ratio perspective, this one here makes sense. You try to be consistent with your target, but sometimes you're like this. People get greedy, it's fine, but I mean, it's a really good trade. Hendra, New Zealand yen. Yeah, if we take a look at the Aussie yen, all the yen crosses, I think they are a little bit negative. New Zealand yen, this one here a little bit stronger actually. So the daily actually got rejected at Kijun Sen. It's not the Tenkan Sen. It's still going to be 84. So let's take a look at New Zealand yen. Yeah, I mean, look. I think this one here is just like the Aussie yen, right? Key levels to watch out for 84. As long as we're already below 84, that's fine. As long as we don't see an hourly close back above 84, then you could actually hold on to that short if this is what you're looking at. Then you know where your stop loss is going to be. Right, your stop loss needs to be above, very close, about 85. And since our target level, you can go for 61.8 and nothing more at this point in time. But yeah, I'm not too keen on a weaker yen. So I think whatever happened today, it's more of a blip than anything else. I think the long-term sentiment is still ways that the Bank of Japan might shift to a more hawkish stance going forward in the future. So that's still going to wait. And I much prefer to short the yen crosses. I would prefer to short the euro yen, the New Zealand yen, Aussie yen, the dollar yen, except sterling yen. You got a short position, 84 stop loss. Yep. No, 84, 84.90, right? We're looking at the same thing. Take profit is at 82. Mine is a little bit higher, but yeah, you can go for 82.50 or 82, and you're pretty much on target here. See, once we start looking at things the same way, you guys start noticing that you already know the answer. You just need that confirmation from me. Can I check the New Zealand USD time frame? Daily time frame, inverted hand shoulder, is it at 65? Yeah, we already have that. We already have this. Yes, it is an inverted hand shoulder. This was asked last week by someone in the Telegram channel. So yeah, just waiting for the neckline to be broken at 65, and that's pretty much it. Yeah, New Zealand dollar, just need this to go above 65. I don't expect this one to, yeah, I mean, if we have this tonight, then I think it's great. But I think if we take a look at it on the hourly time frame, yeah, you might actually wait for a little bit on the New Zealand USD here. We actually might get we might actually not have enough momentum to break above 65. So this one here could come back down and then it'll break 65. Ideally, that's how it should be. Because it will reset the intraday momentum. It would give it enough boost to break above 65. See the pound USD? Yep. Let's bring back pound USD. So pound USD, this one here, we wanted to trade above 1.23, but there's a little bit of criteria. Ideally for today, I want to see price get rejected. I don't want to see price break above 1.24. I want to see a little bit of a turnaround. I want to see price come back to 1.23 one more time, right? We break above 1.23. I need this to come back down. If price move back down closer to 1.23, that's where I want to go in short. And then in terms of target level, you can play around with it. You can go for 1.2450, or you can adjust it to 1.26. So this would be an intraday trade that could transition into a swing trade. But on one criteria, I don't want it to close above 1.24 tonight. I want it to stay between 1.23, 1.24, ideally closer to 1.23. That's where I think a market's going to pick it up again. Okay, so keep a close eye on the pound USD. This one here, it's not a trade right now. This one here needs your patience because I think the market has rallied and it's a little bit too late. So I want this one to ease off a little bit. I want to see a little bit of a pullback. And the criteria is that it doesn't go above 1.24. I want to see a pullback towards 1.23 first and then a break above 1.24, right? But we are picking up the trade closer to 1.23. So I definitely want to see that pullback happen. All right, cool. Dollar cat for a short, hourly time frame. Dollar cat for a short on the hourly time frame. Probably not. I think this is a completely different view compared to the dollar Swiss. The dollar Canadian here is actually within a symmetrical triangle on the daily time frame. You guys might not see that, but let me just draw it for you. Have we broken outside of it? This is just a rough one, okay? So just to give you a little bit of a rough look on it. But yeah, just be mindful on the dollar CAD. I don't think this is actually on the same ballpark like the dollar Swiss. So I need you to be a little bit more careful with the dollar Canadian. Dollar Canadian, we just don't have enough momentum for it to go anywhere, at least not on the daily time frame. In fact, it's still below 20. So we might actually see this one push down, but we need a little bit of a confirmation on the hourly time frame. We need for a little bit of a pullback. At least the momentum needs to go back up and resets itself. Until that happens, any short on this one here, it's going to be a little bit tough because if you try to go in for a short right now, your stop loss would need to be here at the very least, right? But you know, market could push it up and move it closer to your stop loss. So, you know, ideally it's much better to wait for the pullback to happen because we don't know if this is just going to pull back there. Right? I don't know if it's going to pull back there or is it going to pull back there. Technically speaking, if this one here is to remain in a downtrend, it shouldn't exceed the Ichimoku cloud, but the Ichimoku cloud is a little bit flat. So be thinking for a short, you can go in for a short. I'm not saying you can't go in for a short, but your minimum stop loss is going to be at around 1.3410. At that point in time, I would probably just move it a little bit higher towards 1.3425. Target level, you can go for 1.33. Risk reward ratio, it's still going to be okay. It's fine. So yeah, if you want to go in for a short, I think you can. Just your stop loss needs to be at 1.3410 minimum if you're thinking of a short. I'm just not seeing it on the momentum, but price-wise, yeah, it's a little bit flat, but you can go in for a short if you want to. I think there's already a bigger short there on the dollar Canadian. All right, cool. All right, any others that we need to take a look at? Dollar Canadian, it's an okay trade. I think it's an okay trade for dollar Canadian, but on this setup, it's not huge, right? I think if you guys are looking for a small risks in the market. This one here is only about 30 pips, so I think this is an okay trade. Yeah, I think it is a great. I think it's a great trade in terms of risk reward ratio. So yeah, this is good. This is actually good. Okay, stock market. Let's take a look at the stock market before we wrap it up for tonight. By the way, any requests that you have, we still have about 10 more minutes to go. Just type it in. But I just want to bring your attention to the stock market because stock was a little bit jittery as well back on the Bank of Japan side. So with these, the US 30 right now, we are currently capped at 78.6%. So even though this is above the Ichimoku cloud, I need you to be a little bit more cautious. If you're looking at the risk sentiment here, this is very, very deceptive at this point in time. The US 30 on the hourly time frame is already below the Ichimoku cloud, so I think we actually might see a little bit of a push lower in the near future for the US 30. Okay, intraday wise, I think this is likely going to be capped at about 34,000. This is actually going to be your sentiment indicator. Either you trade this or you don't trade this. You want to focus on this one. Sorry, not 34,000. 34,1. Okay. Right. 34,100 is it's going to be a limit. If we see price continue to push closer to 34,100, there's a potential for a rejection at 34,100. Since we are already monitoring this, you know, you take a look at where that 34,100 is. It's roughly going to be about that 61.8 to 50% level, right? So what we're looking for is we're anticipating for a market to pull back towards 34,100, and if it fails at 34,100, then look for a shift in momentum. If there's a little bit of a shift in momentum, if the market if the stochastic goes up and then goes down, and then price is at about 34,100, there are a couple of things to look out for on this one here. This could be a little bit of a sentiment indicator that the market might turn bearish. That's number one. You can actually trade the index yourself if you want to. If there's a rejection at 34,100 and you have your stop loss at about 34,250, that should be about okay. In terms of target level, then you can actually go for a little bit lower on this one because if we are looking at the $30, sorry, not $30, US 30, we are looking at a push back towards the Tenkan Sen, which is at around 33,600. So, which is right around there, right? It's an okay risk reward ratio, but this one here, we are anticipating a little bit of rejection at around 34,000. Look, right now, in terms of earning calls in the US, it's not really anything major. So people are kind of shifting their attention a little bit, you know, looking for opportunities because they can't trade what happened with the Bank of Japan. That's on the stock trader side. Aussie yen. I think we did talk about Aussie yen. So this is the Aussie Japanese yen. If you want to go in for a short on the Aussie Japanese yen, you can wait for a close below 90.50 if you want to, or you can go in right now if you want to. If you go in right now, your stop loss needs to be at 92. If you wait for a break below 90.50, your stop loss might be lower at 91. But if you're thinking of going short on the Aussie Japanese yen, then we are really relying more on a potential failure or a potential rejection at, you know, that 91, 92 level, which is what happened today. All right. You know, I think if we take a look at the daily time frame on the yen crosses, I know there's a lot of lines, but bear with me here. You can actually kind of make out a support trend line here. If that support trend line breaks, it might look like a break of a descending channel because this is no longer a flag, right? Because this is more than 20 bars. So this is already an ascending channel, which is again more of a continuation to the downside, but it needs to break below it. So if you have a short position on the Aussie Japanese yen and price breaks below 90, I think you can adjust it, you know, closer towards 87 as your potential target, even for the Aussie Japanese yen. You short at 1.2203. When will it be positive? I'll be honest with you. My view on this one here is that I don't expect price to go back down to 1.22 anymore at the very least. The worst it might go to is probably 1.23. So yeah, I don't know when it's gonna come back down there. But right now, the current trajectory, we are still eyeing a potential run towards 1.26. So don't hold on to that trade for too long. If it continues to break to the upside, you need to make a decision on what to do with that trade, whether you want to cut it off or not. Okay, XNG USD on any particular time frame. Energy is not, the gas prices are not too great, especially on the daily time frame. I think we are really in a strong downtrend. I would say don't try to attempt a buy on gas. If you take a look at it on the other time frame, it might look a little bit choppy, because if we take a look at it on the daily time frame, it is already flat. It's flatlining. So yeah, I would be okay for a short, but I mean, if you're looking for a buy on gas prices right now, I don't think it's a great one. All right, last one would be the Euro New Zealand, unless you guys have any others. Euro is getting hammered everywhere, right? The Euro USD is really hanging on strong, but if you take a look at all the other crosses that's already turning around. Euro New Zealand, I think it's fair to call this a rejection from the Ichimoku cloud. We need a confirmed close below this if you're looking for a swing position. We want to see a break below 1.66 at the very least. Then your stop loss would be there. In terms of target level, you can go for this swing here. Yeah, this actually still counts. So yeah, I would go for that 127, probably 161.8, 127.2. Risk reward ratio is going to be 1-to-1 initially, but it's going to be huge for a swing. If you're looking at it from an intraday perspective, if you want to go in short Euro New Zealand, then you can go short right now. Just make sure your stop losses are at about 1.68, which is still going to be about 120 pips. Target level, you can go for 1.65 on the hourly time frame. That's probably the best, but your stop loss is still going to be about 115, 120 pips. If oil pulls back to 81, nothing. I would go for. You mean if you want to go in for a long on oil, or you want to go for a short? What do you mean? If this one pulls back to 81 and you want to go in for a long, okay. If it pulled back to 81 and it bounces off 81, so there's no close below 81, then you can use this swing as your stop loss if you want to, or you can use this one here at around 79. So either 79 or about 80 and 80 and a half. Okay, if you want to go long, you have two options. Your stop loss could be at 80.50. Or could be at 79. I would prefer that 79 instead of 80.50. In terms of potential target, unfortunately, you don't go for longer than 82, 83 at this point in time. I would probably keep an eye out in 82. But if we see that bounce, I think we should create a new extension on the assumption that the bounce happened at 81. Then we can deduce a potential fib. Therefore, your target level would fall roughly around 82.50. So yeah, risk reward ratio is not going to be great. And that's probably the reason why I'm still waiting on for, still waiting on a daily close above 82. But yeah, once we close above 82, then, if you use this stop loss here, then risk reward ratio is it's gonna make a lot of sense, right? You're looking at 1.2.5 risk reward ratio. So you got two options: either your stop loss is at 79 or 80.50. But yeah, those are gonna be your projections if there's a bounce off 81. Okay, great. It's a pretty hectic day. Let me tell you, it's been a crazy day, and it's my with disappointment from my side at the very least, because I was sidelined for no apparent reason and missed out a big chunk on the pound USD, so I have to split the trade up. But hey, no biggie. I think the pound USD is a little bit clear. I think that's the one trade I'll keep an eye out on. I wouldn't touch the sterling yen for a short, just to keep you reminded. I'm okay with the dollar yen going short. I'm okay with the euro yen short. I'm okay with Aussie yen short, New Zealand yen short. I'm not too keen on sterling yen short. Okay, out of the yen crosses, the only one that you need to avoid is sterling yen. I don't like this one going short just because the sterling strength right now. All right. Okay. So I think we can wrap it up. I don't think there's anything major. In half an hour's time, you will have the US PPI numbers and the US retail sales numbers. The PPI might move the market a little bit. Retail sales probably not as important. The PPI and the core PPI, it's probably going to be what you're looking for. Right now, the PPI is expected to be a negative 0.1%. Previous one was 0.3%. So we're expecting a little bit of a drop. Okay. So I think that's a wrap for tonight. Thanks for joining in. Good luck with the trades. We don't have Friday session, as per usual, right? I think there's a pause on the Friday session because we need to set up new materials, new schedules. But Friday sessions, right now it's off the schedule. So we only have Monday for Bahasa Indonesia and then Wednesday for English. Thank you all. Have a great evening, great day ahead. Good luck with your trades. Stay safe, and I'll see you soon. By the way, if you celebrate Chinese New Year, 恭喜发财 to you, because I wouldn't be able to say it over the weekend live. But if you're celebrating, then ahead of time, wish you a very merry, happy Chinese New Year. Yes, that'll be a webinar.